Hey guys, this is Izzy. If you have liked and subscribed, thank you for coming back. And if you haven't yet, like and subscribe to support my channel so I can keep on creating more content for you. So this is my new video of my new series that I'm gonna call Charts. So I'll teach you guys anything that you'd like to know about the technicals in the market, and a lot of people requested me to make this video, which is how I mark my liquidity. So what is liquidity? So by definition, liquidity is the areas that we have in the market where we want to trick buyers and sellers. So if we are going above, we want to create the impression that we're going to continue to go higher, but then we reverse. And same thing for the opposite. If we're going lower, we're tricking sellers to think we're going even lower, and we just reverse. That's how the market we call it grabbing liquidity, which it means it's blowing people's stops. So if you lost an account, if you lost money, you've been liquidity. I'm sorry to tell you, but this is why I'm teaching you guys, so we stop being liquidity. All right, so I know what you guys gonna say. I know what ICT says. Do not rely on indicators. However, if you think that I'm not gonna use technology, you're wrong. 100%. If I can click a button and this button shows me midnight price, and I don't have to come here every single day and mark my midnight price like I've done for months, I'm going to do that. Because honestly, it would be stupid of me not to, because we have technology for a reason and I can appreciate it. Okay, so yes, I have a few indicators. I don't use all of them all the time. However, I do have some favorite ones that they do help, so you don't have to mark the same things on your chart every day. Can I do all of this manually? I can. I will show you both ways. Okay, you don't have to rely on indicators, but as a new student, especially an ICT student, it is really hard to keep up with everything. Okay, so I began by being on the 15 minutes, and I really like this indicator by Lux Algo. It's called Smart Money Concepts. I'll leave the link below. And no, they did not sponsor this video. I just actually really like their product. I think it's very useful for beginners trying to understand ICT. I don't turn most of this on, but if you have trouble seeing structures, I recommend turning on the equal highs and equal lows. If you struggle seeing fair value gaps, I suggest turning this on as well. However, I would only extend like 3 fair value gaps, because you do not need 10 of them, because not all 10 are accurate. And then you have to pick the correct one. But what I really like about this indicator, so I don't have to do it manually and keep track of it, is the highs and lows of the monthly time frame. So daily, weekly, monthly. And we have premium and discount zones. So, you can pick your own colors, whichever one you like, and you just can click OK. So I'm going to explain to you why these things are relevant. Okay, so what is equilibrium? Equilibrium is the 50% of the fib. All right, so if you grab your fib, you put on the lowest point on the chart that you see. You can do it the day of or the previous day. I recommend the previous day. And you put this for the lowest swing point to the highest, 50% equilibrium. Okay, you can do this the opposite way as well. You can go from top to bottom, and there you go. 50% is just the middle of the range. All right, so price may come back and reject it. So like you can see here, price did touch equilibrium and reject it. You could have gotten here for a sell, and of course when we broke above it, this was an indication that we were definitely bullish at this point. And Premium is just the area above it. Discount is the area below. And sometimes I do use equilibrium as an entry. Okay, so premium area, it's where the buy side liquidity is at. So we have two types of buy side liquidity, internal and external. So internal is within the daily range. So whatever is on the daily candle is within the internal side of it, and then whatever is from the previous daily or weekly, those are external. So if it's not within the daily candle, is external. How do you know that? Then again, I have another indicator that I like to put, which is the higher time frame power of 3 by 2G greens. And this shows you the daily candle, okay? Which makes your life a lot easier. Do I trade with all of this in my charts? No, I don't, but I use as reference, so then I can erase or turn off all of this in trade, okay? This is just to help you mark. So on the buy side liquidity, we look for retail resistance and trend lines. So right here, and this would be considered resistance, like on retail side. And we look for double tops, so anything that is a relative equal high. And we also look for previous sessions highs, okay, and previous daily high, like this, okay. And for discount is your sell side liquidity. We have two types of sell side, internal and external. We look for retail support and trend lines, same thing. And we look for lows of previous sessions. And we also look for previous daily, weekly, and monthly low. I know I just put daily, but it's also all the above. Because, your charts are fractals of each other, so all right. So with this being said, I then go down to the 1 minute. And over here, we can turn off deluxe algo indicator for now, and I'll turn on another indicator. I know I'm going wild, but yes, is the Sonar Lab sessions, and this is also free. I absolutely love this indicator. I used to do this manually, like I said, and it was a pain to do it. Like, sometimes you're not as accurate, you're too sleepy, you're too tired. This will mark it for you. But as an ICT trader, you do want to make sure you pause this video and change the Asian to 8 p.m. to midnight, London 2 a.m. to 5, New York 7 to, let's put to noon. Okay, and then it also marks the open levels, the daily, weekly, and monthly. All right, so you want to make sure that your time zone matches your time zone over here. So if it's -4, you want to make sure it's -4. All right, so this is really good. So if you want to do what I do, I grab a horizontal ray and then I start, right? So I mark my London high, which it happens to be the high of the day. So that is still internal buy side liquidity. Okay, please go back to the 15 minutes time frame. I forgot to mention something. While you're still on the 15 minutes, you want to go over here and mark the equilibrium so you know where it is. I just put 50%. and then you drop down to the 1 minute. Okay, so you know exactly where you are looking at for the range. You can refine it probably right here. So now that you have this marked, you can turn this off, and remember, everything up here is buy side, anything below here is sell side, and we can mark this area because it was a previous low. I believe this was the previous daily low. So that is going to be your external sell side liquidity. And then your Asian low, you see how there is like equal lows, and is the Asian low and is within the daily candle. This is going to be your internal sell side liquidity. Okay, you can find internal buy side liquidities. I would say anything below here, probably like the Asian low, the Asian high before we took it was a buy side liquidity area at that specific point in time. But since it was taken and prices trading above that at that point, I would not mark it. So I would say that at this specific point, I only have this higher point on the London high as my internal, and then I would have to go back and look for any of these previous highs. So this day's high and this other day high right here, or these 2 points, can be considered external buy side liquidity. You can have multiple sides, okay? So external buy side liquidity. So as a quick guide, that is how you can use these, and then I would also mark London low as a target. Okay, so this is also liquidity, and this is liquidity. All right, so this is how I mark my liquidity. And then of course, whenever I'm trading, I turn this off because now it becomes irrelevant, you know. And I just use these areas as possible reversals, so these could be my entries, okay? And these areas can also be targets. So let's just say I believe this was the trade I took, that I got over like 200 points. I believe I marked a bearish fair value gap somewhere around here, if I'm not wrong. I'm gonna have to let this play. All right, so yep, it tapped into that. I took my entry. Let's just say if we take in the a short position right there, and I'm gonna pause right here. My first target was London low, because you know, if we take the liquidity, we can possibly reverse, right? Second target, 50%. Third target, Asian lows. Okay. Fourth target, external sell side liquidity. So this is how I make my targets. My, you know, you can call it take profit 1, 2, 3, and 4. And I would place my stop above, maybe a few points above the previous high. ICT recommends anywhere between 40 to 50 points for your stop. So this is exactly how I frame my trades and how I base it around liquidity and areas of interest. So as you noticed, the sell was way above the 50%, and I was targeting sell side liquidity. Okay, well, I hope this helped you guys to have a better understanding on how I view the market, and I hope this really helped you guys. Have a great day, and don't forget to like and subscribe.